Welcome in. It's our Power Hour flow and chart session. If you're new to joining us, we look at flow, look at the overall market, just kind of a bunch of random stuff. If you're returning, feel free to drop questions, comments, whatever, so and so in the chat here. Um, if you're new, the chat is actually in kind of an odd spot here. Don't use that main chat. Just kind of come up here to that show chat, and then feel free to drop questions in here. If you got flow or anything you want me to look at, feel free to drop it in there. Otherwise, I'm gonna kind of start out with the market tide, and just we can go from there. But yeah, starting out right now, market tide's still bullish here. All call premiums are ask side here, just very slightly ask side here. All of the other premiums out of the money, calls only, out of the money puts, and all puts sit in bid side here, so that is a bullish read here. You are getting ask side, all call premium here. I would say it's more neutral to bullish here, but just looking at the numbers, it would be a bullish market tide here, and good call volume here as well too. SPY and Apple are your main contributors to that. And everything else, I mean, just essentially pretty flat for most of the day there. Just not a ton going on here. And flow wise, saw a lot of these fly calls earlier. Just horrible bid ask spreads on them though. I know I saw a lot of people on Twitter posting that too. I tend to stay away from that once you start seeing a lot of people on Twitter post this stuff, but just overall a lot of multi-leg stuff coming in, just not a ton of super good looking flow. These long-term COUR7 calls, interesting here, a little pretty far dated there, especially for my taste. I don't have that much patience, and I'm not super big on those names that are under $10. They're just so slow. I know there's people that do like them though. Definitely interesting flow there. Did move from that original posting. CRML, I saw these. This was an interesting one. I just didn't like that put premium and call premium both being up there. Otherwise, besides that, that flow looked pretty good here. A little higher IV though, but IV staying up here. It's repeated hits. Flow's coming at the ask. Looks pretty good there. And what else do we have? We had those Uber puts earlier. This will be a kind of an interesting one. Uber's been very volatile today. But just kind of looking at that flow here when it came in. Let's pop this out. Let's make sure we got everything here. So again, it's matching that textbook flow here. You see that IV increase when that flow comes in. Spot is filling at the ask. Looks good that entire way up. No big change in the IV. No big change in that spot. It's all filling at the ask. Looks pretty good there. 10 days on those, so could see a little, maybe a little downturn here in the next couple days if that flow works out. Interesting though, because you're not really seeing any call participation, and Uber's been kind of popping there, so that is something that does stick out to me there, and that put premium has been climbing throughout the day too, so definitely something to keep an eye on. And those Amazon calls from earlier in the day, absolute rocket ship from those. Then probably have some potential profits coming off here. Have to check that open interest tomorrow, but we'll probably be looking to get out of those after the big move up. But other than that, it's been, yeah, very quiet there. I mean, just more of those COUR calls, and those HD puts were interesting, but you have earnings in 7 days here. Some hefty premium on these. For Home Depot, I should say, 557K, but one of those that's a risky flow where earnings are in 7 days, but this isn't really earnings flow, but you'd have to kind of withstand that earnings drawdown or pop. Just earnings aren't always the best to swing stuff over. Um, but yeah, I mean, other than that, it's been pretty pretty quiet here. That 320.11 put, these just came in on the Hun. We can take a peek at these. Huge size on here. We already have a lot of volume on the day, but let's just take a peek at it. So we got 20,000 earlier in the day, plus another 9,800 here. So this one, 48, and they're filling at 55. I would probably say these are being added. Would have to wait to see that open interest tomorrow to confirm that. I'd like to see that open interest about 30, almost 32,000-ish or so, give or take maybe 100 or so. But if this drops to, or if that open interest only goes up by 21,000, then they may have took some profits there. But I would say more than likely it's probably an ad. Let's just kind of double check it here. So this is coming in as a block trade. So when you see all that size come in at once, you don't have that flow around it. Like the Uber flow we were looking at, you could see kind of how that flow reacted. That flow looked before and after with it. This is just coming in one big block, so you don't really get that opportunity to read that flow there. You can look at that flow from earlier though and see if we got anything. So this one, so like here, it's coming in as a block trade, but you can actually kind of read this a little bit better. So you have that first big block trade come in there, and then you see that IV spike there, and that's a pretty big spike in IV. So earnings today as well too, so something to keep an eye on. I didn't realize that there. But you see how that spot rises there, IV rises, looks good there. But yeah, earnings today. Oh, it didn't say it there. That's why I didn't see it. I was like, I usually always see it there, but nope. Yeah, that fly. I want to look at that one more time. So a lot of that. So a lot of that earlier stuff there. I mean, that spread at the time too. When that was coming in. Let's see if I can find. Here's your spread at the time. 15 cents to 65 cents. That's a horrible spread. You can get hurt in something like this. I mean, if you hit the ask at 65 and drops a little bit, I mean, you could be down 40, 50% on that trade right there. So that's kind of why I held off posting this one as well too. Just that wide bid ask. It looks great now, obviously, but at the time, I mean, you fill on something like that and you see a pullback, you can get hurt on something like that. But yeah, let's see what else we got coming. I gotta take a peek at Periscope here. I haven't really looked at this for a while. I am interested in that, in this 68.70 level. We're coming into a lot of positive gamma, and we've seen price slow here too. So you could be seeing maybe a little pullback here, and then I'd have some support here at 68.10. Other than that, I mean, earlier little bounce here at that 68. Let's go back here a little bit earlier. So that was probably about 9, give or take. Yep. So, oops, I've got to come back out here. So our low of the day was here, and just kind of a small little area of positive gamma here. That 60.70 or 67.80 there. I mean, you saw that pop there, bounce there, that 67.80, accelerate through that negative gamma, and then we kind of didn't really stop there. It just kind of seemed to accelerate here. Just kind of want to keep going through this a little bit. And you can just also see how we're getting a lot of positive gamma up here as well, and positive gamma down here too. And I plan on kind of doing a deeper dive on Periscope here. I'm, again, still kind of learning it here, but I just want to get it mastered before I start incorporating it a little bit more. But I would be looking for maybe a little pullback in this kind of 68.60 area. Though we are seeing a lot of net call premium on SPY and a lot of volume here, so kind of might kind of just chop in this area too, but if we get below that 68.50 and see some of that call premium drop, and that volume could maybe start looking for a drop down to that 68.10 there. But last hour of the day too, so a lot to kind of go on there. Let's take a peek at these. That's a big size coming in here. The 618.5 puts. So down 5.87%, 52% out of the money. Let's go take a peek at these. So again, another one of those block trades. You just don't get a ton of information on something like this. Definitely interesting though, especially big spike in that put premium. How's that look the last couple weeks? Yeah, that's a lot of put premium here. This thing has just been destroyed. Alright, is anybody seeing anything, or does anybody want me to take a peek at anything, or any questions at all? I'm going to grab a drink here. Those silver calls from earlier too, just so far out of the money. Let's see. Okay, you're asking about UPS flow. What contract were you looking at UPS? I know you were looking at the net premiums here at first. I'd have to go back and look in the chat to get that exact contract, but I know that net call premium gap was one of them that I highlighted and kind of opened a little down and then kind of sitting down here now. And then SNDK. Yeah, I'm not sure if you're looking at the for the net premiums there, Lilu, or if you're looking more for an actual contract. SNDK. Yeah, that's just kind of all over the place. I would just expect this thing to stay volatile. But you do have that first lower gap filled, and then you still got that lower one there, but then you got some positive there too. That premium, but there were a bunch of bid side calls. I don't know. Do you know? I can see if I can take a peek here for UPS from Friday. So let me go check UPS. Let's go back to Friday. Bunch of bid side calls. So I was like, okay, let's go to the 13th. So I'm guessing this is probably what you're talking about here. Alright, let's see. So I see that one, yeah, that's definitely got modified. Something odd went on there. Yeah, let's see. So this is just place. So yeah, so they probably came in and they got canceled, and it still showed up. Let's see. I wonder if that's the only one. Oh, I see exactly what you're talking about. Yeah, I'm just clicking through a couple of them here. Yeah, it's not very often you see that. It's very unusual though, where you have that many names get nullified. And the thing is too with these, they're very, very deep in the money. So if I was just catching these on the flow feed, I'm ignoring something that's that deep in the money. You never know what goes. I mean, everything kind of super deep in the money. It's almost arbitragey. It's yeah, they do the stuff for really odd reasons. Like you could see all that. I mean, even if this wasn't nullified at all, and like all this open interest carried over, with it being that deep in the money, I just don't like the deep in the money stuff because people they can exercise the contracts and you won't know until that next day. But this doesn't look like that to me. That's really interesting to me without being. Yeah, this is just really odd though. Yeah, I know. I was trying to talk in there, I think last week, and I was like, geez. Um, yeah, so unknown. Let me just finish up on you, Lilu. I didn't want to try to cut you off there. Yeah, like this is just, it's very odd, very odd flow that caused that. Um, and, and that's the thing with like the net premium gaps. You have to kind of just go off that the net premium there. Like you can, I mean, the smart thing would be to do is kind of dive into the flow a little like this. And if you saw all this negative or in the negative in the money calls, I'd probably be like, okay, that's probably something that I'm gonna ignore or avoid there. But like just, I mean, with that net premium, I'm trying not to, combine them because I mean there's so many different little moving pieces that can go with each single channel. But yeah, this one's definitely interesting. Like if I saw this on the flow feed, I mean this wouldn't even hit my flow feed, and my filters aren't even set for that at all. But okay, let me answer Unknown's question here. Yeah, we can look at Carvana after here. So let me just kind of go over your question here, Unknown, 1 second. Still that had one trade that took look one trade to look for a really good profit. Which one would you point to like in short term one? So okay, so I and if you have a different question about that too, like if you want to expand on that too, if I'm kind of going in the incorrect direction, feel free to chime in. But so like okay, so you're looking for more short term, and that's kind of the same setup as me. I'm not good at holding contracts a very long time. I don't have the patience. I'd rather deploy my money in something closer where you're likely to see a quicker move versus contracts that are 300 days out. So let's use that Uber flow from earlier for an example. So Uber flow hits the feed here. I see. Oh, I can turn this to today. So my order of operations. I'll just kind of go through that. So flow hits the feed here. I'm looking at certain specific columns here. I don't want my flow to overlap earnings. These expire in 10 days. That is, I'd say, a short midterm trade coming in here. The rule doesn't. I don't really base a trade if there's a rule or not there. It's cool to see a rule there, not a game breaker at all there. But I'm looking at that spot, that bid ask. We can see that spot's coming in at the bid ask. I'm kind of looking at that size right away and that current open interest there. So right away I know that size is more than open interest. I know it's an opening trade, and just with filters too, most of that's kind of already factored in. And I know it's a put. So my next step there is, okay, this looks very interesting to me. Let's go take a peek at the flow. I get here, my eyes just kind of scan the whole screen here. I'm looking at this side first. I kind of like to see that overall put premium or call premium, depending on what name it is. This one's Uber, and it's a put, so I'm liking to see that put premium up there. This is our flow over here, so I always just kind of hover over that candle, just kind of a good little habit there, especially if you're newer to the flow. Again, paying attention to that volume and open interest is huge. Volume here, 943 contracts traded at the ask here, and there were only 485 open interest contracts. 100%, this is an opening trade. I can 100% confirm that, tell you that. No doubt, no debating anything of that. So my next step here is, now if this came in a little later in the day, and I had some volume here, I'd kind of maybe look at the other candles just kind of size-wise to make sure it's not equal to that. Again, this doesn't look like it's even close to that, so nothing to really worry about there right now. So my next step, I always look at that candle. So this is the difference between that block trade and then this type of flow here. This is exactly what I'm talking. So when that flow comes in, so again, the certain columns you want to pay attention to, your IV size is important here, premium, spot, bid ask, and your timing. So the way I'm reading it, and everything comes in, so all the flow, it's all timed out. So the newest flow will be at the top, and your oldest flow will be at the bottom here. So you see that flow come in. I like to see how that IV and this whole trade is impacted here. So you can see that 8:51:32, and I'm Central Standard Time. This is all coming in. So this is all the same second, very similar sizing, very similar premium. I would 99% take an educated guess this is the same person. I mean, unless you're that specific whale, you're not going to be able to 100% know for a fact, but just kind of using context clues and just kind of, I tell people use your eyes when you're using flow. If you start kind of overthinking everything, it kind of might throw you off a little bit. Just a very strong, educated guess. Who else is grabbing 900 contracts here, same time, everything? So now this compared to the block trade. So the block trade, you just have that one line with all that volume and everything on that line. You don't get to see how that flow reacts. So what I'm looking what I'm looking for in the flow here, I have certain rules that I consider my textbook flow rules here. So I like to see that IV increase when that flow comes in. I like to see that spot fill at the ask, and that timing pretty much all be the same here. So when this flow comes in here, you can see how that IV spikes here. So just a very, very quick thing on the IV. So the idea behind IV is when you're seeing that IV increase on the contracts, the thought process is that whale, that trader is expecting a move on those contracts. So that's why you're seeing that IV increase. Now, vice versa, when you see that IV decrease, that could signal that maybe that whale's not expecting that name to move anymore, so they're selling those contracts. If you're new to flow, I would say just stick to kind of the ask side flow here. And that's one key thing too, is not all ask side flow is a buy. So that's kind of why you have to dig into the flow a little bit like this. And kind of like I was telling you in the chat earlier too, these people are humans too. Even though it doesn't say it's like a multi-leg trade, you just never 100% know for sure if this trade is attached to something else or what the whale's doing. Maybe they're buying 50 million shares of Uber and they're just hedging with a put. You never know. So I mean, that's where kind of the risk management comes in there too. But continuing on, so I don't take up the whole hour on the one trade there. So IV spikes here, I like the sign of that. That spot is filling at the ask. Timing is completely the same, and that IV is not increasing or decreasing, so not a big deal at all. That looks good there. If it's decreasing, I'll see if I can find another trade here after this one. Maybe we'll look at Carvana here for Nonex here, and then we'll hopefully I can maybe find something in there and show you an example of like that IV decreasing. So like if that IV decreases, I always see how much of that premium and that size is it that IV decrease. Now if it's like one contract in $144 and you see that IV, let's just say it dropped to 41.30. That's not a huge deal just because it would pop back up, and it's a very, very, very small piece of that overall trade. I'll see if I can find a good one here for you. But so Uber here looks good. IV increases, spots filling at the ask. Timing is 100% the same there. That flow after, not related at all, I'd say. So good thing you could always do is, if you like the flow, once you have so much screen time, I mean, I've been using Unusual Whale since like 2021, 2022. So I mean, I can kind of just look at the flow and I can just kind of just like, okay, yeah, this looks good. I'm gonna grab that. But if you're new, I mean, I highly suggest. I mean, I open up my charts. Let's just kind of go over here. So okay, let's say you really like that flow. You know it's short term. That's what you're looking for. I just pop over to a chart here. Let's just see where we are on Uber here. So okay, we have a pretty ugly Uber chart overall here. So, and with the days to expiration, so with Uber being 10 days to expiration, I think of the expirations as kind of the timeline of the move. Now, a good example of that, let me go back here. Like Apple today, the 515-290 calls here, these were 87 days out. Now, maybe this whale, again, you just never know. Like 87 days out, and they ran massively today. Like sometimes those long-term pieces of flow move very quick. Sometimes they don't. But I just like to kind of think of that as kind of like the timeline of the trade. So Uber, this whale is 10 days out. They're probably not looking to hold the contracts for a significant amount of time because you have theta eating the contracts away. So I pop open the chart here. Let's just see. Okay, well, we're trading at 70.52. Let's see. I gotta get a drink here. Sorry. So, man, oh, the weather here just sucks. So okay, I'm looking at the chart here. Okay, well, maybe I want to find a good support. So I'm looking at, like, okay, let's say I'm getting those Uber puts, and I'm grabbing them as is. So that's another thing too. And the more you join these lives too, you'll really kind of see it over and over. I mean, I usually hit on the stuff a lot, same day, over and over, but like the longer term flow, like that Apple 87 days out, typically you can find a discounted entry on something like that. Now it ran today, there's nothing you can do about that, but usually that longer term 80-day out flow, I always recommend kind of charting something out like that. You'll be able to find a better entry on something like that and kind of set up your risk tolerances more. So Uber here, let me delete this one up here. So Uber, let's say I'm looking, so I want those puts. I really like that setup there. Okay, well, I can see we're sitting on strong support right now here. So maybe I'll say my risk would be maybe I'll let it sit for a day or two, and then if we close below that support of 70.47 there on Thursday, Friday. Personally, this isn't financial advice. If I was going to take those Uber puts and I'm setting my support at that 70.47, I would probably give it till maybe Friday to make a move. I'm not a big fan of holding stuff over the weekend, so I know they're 10 days out. So Theta's not going to be too aggressive on them this week. Once we get to next week, and then you have 2 days over the weekend, you're going to probably start to kind of see that theta decay really kick in there. So, I mean, that's kind of how something I'd do it potentially there. I mean, just kind of a quick little thing. Each name's kind of different there. So, I mean, just kind of a small example there for you. Let's look at Carvana here quick. Actually, I want to read what Bean just dropped here. Man's trader Japan's just launched. I'm a farm with first set of. Oh man, if I keep seeing that word tariff, I'm just gonna go crazy, man. The last year was just insane with that. Okay, let's see what I can find for Carvana here quick. Let's just open up a new tab. So Carvana here. So Carvana. So again, kind of order of operations, what I'm doing here. I usually keep that net premium at 14 days or so, just so I can kind of get a more midterm view of everything. So right now, Carvana, couple interesting things to me. I mean, we had that big spike in net call premium on Friday here. I think this is actually one that I threw in the net call premium gaps. Got another small spike here too. So again, if you look in that net premium gap channel at the top here, let me just pop it open here just so people can see. So, I mean, I have a little kind of how to use that channel in here as well if you want some examples, but that I think that was one. Yeah, Carvana was one that I updated there on over the weekend. So essentially with the net call premium gaps, I'd like to see that price kind of gravitate towards that. So price kind of coming up, and again, it can take a little bit, but we got two big spikes there. The put premiums, like, we discount because again, if you see a big spike in put premiums, that gap, that price has to go up to fill that gap, which is not how that would work technically. So that's why we just use the net call premiums. So net call premium gap there. Maybe I want to take a peek at that IV rank here. So this is just kind of another little tool here. I just like to see how that price reacts to that IV. IV can't go above 100 or below 0. So typically when you get closer to that 100 or that 0 and it has to bounce, you'll see kind of an action in price. I don't see really anything here. You're kind of in the middle. So let's see what we got for contracts here. Oops. Yes, that's a very good tweet to always go back to Bean. Very good example there. Let's look for contracts here. Yeah, that's a big issue. I mean, you just, yeah, yeah. I'll leave it at that. That could be a whole 2-hour chat. All right, let's see what we got for ask and bid side. So I'm going to start with 50% ask side and at least 50% bid. Oops. Okay, we're just going to do ask side here. So, oh, this is interesting. 14% in the money. Big multi-leg. Okay, so I like to see, and again, you can tweak these numbers to kind of get more flow, less flow, whatever you want. So like this, the 50, you're not getting a ton of flow here, so let's try to pop this down to 35. And let's set our premium at like 10,000 and see what we get. And I do not want anything over 15% multi-leg. Okay, so that really narrowed it down there. Let's just do 20%. Okay, so this is kind of what I'm seeing here for contracts. It is looking more a little bearish here, seeing action on that 320, 300, 310, and 320 put. Let's kind of go in here and take a peek. So just kind of looking at this. So good example here. Just kind of seeing how that flow's coming in. So this one, kind of I'd say it's more murky flow here. I mean, you see all kind of those different sizes and just that IV's kind of bouncing around, dropping, bouncing, coming up here, dropping, bouncing, and then spikes, and we drop again on big size, big premium. Again, just kind of seeing how it's doing that in here too. I mean, IV comes up, drops, and then it's drop. So like this, I'd say this is nothing really interesting there. I would almost say those could potentially be short puts there, just with that IV bouncing around there. 8% out of the money, 31 days. Oh, we got earnings in a day. Okay, so well, that throws an entire wrench and everything there too. So could be a hedge for earnings. Again, anything that's overlapping that earnings, you just have to. I will pretty much say I'm gonna ignore that flow. Just even if it's, I mean, it's 31 days over earnings and we have earnings tomorrow, you still would have to sit in. If Carvana pumps 15%, you're still going to have to sit through that, and you just don't really know how earnings are going to impact something. But we can take a peek at the historical earnings move here. And just kind of, I mean, it's favoring an upside there. I mean, about a average move of 6.75% there, and when it beats that implied move, it does favor the upside. So I mean, just kind of knowing that it overlaps earnings, I always like to pop in that chart there. And I mean, I'm just kind of looking at that historical move after earnings and everything too. I mean, you have one, two, three, four, five, six quarters here, and out of the last 1, 2, 3, 4, 5, 6, 7, 8, 9, we only have 3 really having red moves after that. So I mean, if I saw those puts, I'd be like, maybe not. Could be a hedge. But let's see if got anything else. So earnings calls here, though. I mean, so this is what I would consider earnings flow here. So it's a weekly expiration, and earnings are tomorrow. So again, even just kind of looking at the contracts and everything might line up, but like here, like this is perfect here. 197.88 IV spike, little drop there, comes back up, really spikes at the end. This is something I would read as a buy. Again, that's a horrible bid ask though, but I would I'll choose my words a little more carefully here. I would lean towards this being a buy here, just kind of with that wide bid ask spread there. I almost it's a coin flip there where it's kind of a potential call sell because they're so close to that bid side, and then I mean that's a very wide spread there. It's almost a mid fill there, so that's just something to kind of, you're not getting a super good thing there. I don't think these are multi-leg. Yeah, these shouldn't be rolling at all here. I kind of dim down that multi-leg there. Yeah, if you may, yeah. Um, I'd have to go back to that Friday and look. Um, and then how about this one? Oh, that's the one we just looked at there. 497.5. So again, another one. I mean, 43% out of the money, 3 days. That's so tough. And yeah, no, Bean, you're right on that too. It's just you kind of have to go off the data that's there. It makes it tough. It makes it tough. But no, I get 100% what you're saying there. I mean, it just might not. It just might not be its label that I do actually. I always go back to this example here. Let me go find it. Here. And this is what I mean about trades not like this one. I always go back to this example. It doesn't show it's a multi-leg trade. Like if we went back in here and looked at these on that 12/8, look at that timing. Very similar timing. Exactly the same size, very same premium. It doesn't read as a multi-leg. So you don't okay, oh, I got it right here. So it shows it's 0% multi-leg. So Bean is 100% correct about that too, where they could be rolling contracts, but it's not labeled as that. So it can be difficult. But this is probably my best example of that. Again, just using your eyes there. That timing is very, very similar there. Same exact size, roughly the same premium, but it's not. It doesn't technically show as related. So I mean, that's just you just never know. That's the thing. You can take a very highly educated guess, but that's kind of about it. But yeah, other than that, I'm not really seeing much for Carvana there. Pretty mixed there, and I mean, if you were looking to play earnings, and again, not telling you to play earnings or giving you any contracts or anything to look at, again, that earnings tab is a really good tab there. Your average move's been a plus 6.75% move. Your implied move is 12% here, so if you get weeklies and you don't get that implied move, they're gonna pretty much get clapped. And that IV crush is bad, and Carvana theta is already very high. So, okay, let's see what else we got coming in. Good examples today. Very good examples. Very good examples. All right, let's see what else we got coming in. So these AMD 36185 puts, so 500 contracts. Just want to double check that volume here. Looks probably going to look good here. So it's 1100 here. So a lot of put premium here. So again, this is one of those, you're already down 2.5% on the day. Do you want to chase this? Probably not. I mean, I'm not a big fan of chasing it. But let's just kind of look at that flow. So IV spikes when it comes in here. Spot is filling at the ask. We look good there. 65.27. So you can see that IV decrease here now in this area, and that 14.29.27 or 47. Very similar, and again, just kind of keeping an eye on that time. So it's not all the same second, but again, very highly educated guess, it's all going to be related to each other because it's very similar size, very similar premium, all that. So I'm looking at the totality here of that IV. So you have a small little decrease in here, and you have a big chunk of that there. I don't like that there. I don't like that. But then our IV comes back up here, and that spot continues to fill the ask. So it's technically an ascending fill here, but I just don't like how that one is in that IV decrease. I would probably still lean either buy to open here. I just don't like chasing something that's already down so much on the day. And keep in mind with that IV too, everybody wants puts on AMD right now. AMD's down. People are gonna think, oh hey, let me get puts on AMD. It's gonna keep going down. Well, that IV can get skewed a little bit there too. It's kind of why I like seeing that. I almost want to say the inverse flow there. So let's look at these AVGOs here. Let's see if I got an example in here. So AVGO, this is kind of a little better example. Not 13% out of the money, but okay, you're seeing puts come in here. Nobody really wants puts. AVGO's up almost 3% on the day. Okay, we're thinking maybe let's keep this going up here. So I was hoping it was going to be a good example, but it's not because it's going to be a block trade. But with something like this, I'm keeping an eye on that IV now. If that IV's decreasing on the puts, I'm going to assume they're probably put sells. Versus if that IV's increasing and AVGO's already up 3% on the day, okay, I like that a little bit more. So just kind of not always looking for the inverse there, but it really helps there. So also got some other, we do have a lot of other AMD puts here that we didn't see here. So let's kind of look at these. So 6% out of the money, less than 10% multi-leg, and that's just kind of a rule I have there. So you've seen all these puts hit the tape here. So let's see. So again, IV spikes when that comes in. Spots filling at the ask. 22. So staying up that IV. Spots staying at that ask. And let's see, 14:20. So a couple minutes later. So hard to, probably not related. But you can see how that IV spikes here towards the end. That's typically a good sign, but again, on something that's already down 2%. And if you really, really like the AMD flow on something like this, give it till tomorrow. Pop open a chart and okay, let's say we like that flow on AMD. And we're 24 days out, so it's more medium term there, I'd say. So like that, okay, well, I already kind of got a little trend line drawn here. Well, hey, maybe if we get back up kind of closer to that 214-ish area, near the top of that kind of 100-day moving average there, near that trend line, hey, maybe I'll take a stab at those puts then, knowing that there's a lot of open puts on there. I'm getting a discounted entry. Just kind of a little tip and trick that I like to do, especially on kind of that medium term flow. Yeah, and that's another good point there too. With that larger cap flow, you typically see a lot of flow on that. Typically, and I mean, like if I look at that overall premiums here on the day, just compared to the kind of recent days, it's really not that much compared to some recent days. But always a good habit here. I mean, just kind of looking at puts here. Yeah, and that's a good kind of thing to talk about too. The market over time, stocks, they want to go up. That's what most of everything wants to do. So you do see a lot of that protection, that downside protection with puts, kind of just protecting, hedging, all that. And I mean that's mostly, I mean I look at ETF flow mostly when you see a lot of big puts coming in. I'll typically kind of lean with those being more hedgy, just because a lot of hedging goes on in ETFs a lot more. But let me close that. Yeah, the like AMD, I mean, your highest volume contracts on the day, just all puts though. A lot of and those big mega cap names too. Like if you want to really get a good read on something like this, I'd probably take off the weeklies and go at least 10 days out. So let me find my days of expiration here. I always pass it. I always look it over like 10 times. Actually, let's do this first. Let's see. It's always at the top, and I just always miss the stupid thing. Where's my stupid days to expiration? Am I blind? Am I still on like... Oh, here we go. Okay, so let's do like 10 days out. Oops. 10 days out. So I mean that way, and let's just kind of limit it a little bit. So I mean that way, at least you kind of get out of that weekly view. So I mean, like if I'm looking at this, I mean that 10-day, 24-day kind of monthly there. I mean it's leading. I mean like this, you'd have to check that open interest because there's a lot of volume on the day. It's at 1500 for. Yeah, you definitely have to check open interest on a lot of these, kind of. Always good practice to double check that. This one, you probably, I mean, I'd more than likely say this is all going to carry over there, barring any other big candles into close. 17. Yeah, I mean, a lot of this flow is, when I'm seeing a lot of put flow like this, though, I mean, I'm not really gonna, I probably wouldn't say it's hedgy. 468. But just a lot of it you'd have to double check that open interest on. Yeah, definitely interesting flow coming in though today on that. Alright, I'm hearing a lot of dings, so let's go back here. So MU puts coming in now. So definitely going to be opening flow here just based on that volume to open interest. So 1,000 there, 343 there. So whatever this is for sure being opened here. So let's look at this. Alright, so that's really early in the day, so just kind of note that in the back of our heads. So when this flow starts to come in here, we see that IV drop, and that spot is coming in at the ask. So I'm just following this up. IV drops a little bit there. We see that IV increase here now, and that spot price decrease. So let's kind of continue to follow this up. So again, that spot is technically filling at the ask here. There isn't really above ask or anything on that. So IV decreases here now. Spot's still coming in at the ask. This is kind of, how far are these out of the money? 16% out of the money. And this is just kind of just using just your brain and just kind of knowing how contracts move. This might print here, you never know, but 17% out of the money, it's already down 3%. You know that IV's kind of bouncing around. Now, let's just kind of go look at the internals of the contract a little bit. So I'm not even going to pop up that table. Well, we'll pop it up just for there. So what's tomorrow, the 18th? So, I mean, you need about another 3% drop to see any major significant profits there. I mean, even by Thursday, I mean, 3%, 16% is not a bad profit there, but after you're already beating up 3%, kind of hard to tell. But I always come down here and kind of look at that delta and theta. So that's a very low delta on those, and that theta is very aggressive. That's what makes me think these could be potentially short puts. That's a very aggressive theta, and that delta, I usually like to see a delta of at least a mid 2 to 1 ratio, 3 to 1 ratio. The closer to the money you get, the higher your delta is. So with that being said, 17% out of the money, is it in favor of, I mean, more like, if I was going to short puts and I know MU's down significantly on the day, I can just set the asking price what I want, and somebody's going to probably think, oh, MU's going to continue to drop, so let's continue adding puts to it. So you could technically be selling those contracts at the ask, but this one, I mean, you could get another 4 or 5% day down tomorrow. You never know, but it's more in the favor. I'd say that these are short puts. They're just kind of based on that delta to theta. Now, if these were 2% out of the money, 1% out of the money, I'd like them a little bit more, just because you have a better chance of at least kind of going in the money on those. But 17% out of the money when you're already down significantly on the day, probably not the smartest trade to get into, especially with a very high theta like that on those. So, okay, let's see what else we got coming into close. Let's see. Yeah, just a lot of multi-leg junk. This is probably going to be a block trade. I mean, horrible bid-ask spread on that one. So this is interesting because that call coming in here, not really seeing a big spike there. You're getting a lot of put premium on the day. It's just seeing, yeah, it's going to be one of those kind of block trades where you don't really have anything to go off of. So I'd say probably junk there. Let's see, how about... Yeah, I mean, half of this stuff, like, I'm only doing it for the stream right now. Like, if I'm sitting here looking at the flow by myself, I'm not even wasting my time on something like this. I mean, it's a horrible bid-ask spread. It's just usually me passing it over there. These TSMs, so how about we look at these? They are very long-term. So our big candle here, 1,000 contracts, then you got 400 there. You would definitely want to check that open interest on these, just because you have all these other volume spikes here. So kind of going back to what Bean shared here in the chat about not all volume is the same. This is kind of more random volume. Again, I try to choose my words carefully. This is more random volume here versus like like this one. It's all coming in one big block. It's not a bunch of little tiny candles all over the place. You can track something like this. Now, like, because you'll see people... Let's see if I can find one. I bet this... Where's that weekly Amazon? I bet this... So, like, I mean, even this volume here. This was the original whale in here. I think 474, 506 ish or 506 ish, or give or take a couple. You have all these hits after. You don't know what's carrying over. You don't know what's being held. It's too much volume to kind of just know. And again, you'll see people say, oh, well, it's ask side, so it's going to carry over. No, that's definitely not true at all. Definitely not true at all. That is, if anybody ever says that, just immediately block them. If they're like, oh, well, it's all ask side volume, it's going to carry over. No, probably not, because you can close contracts out at the ask. All the bid ask is what you're putting in for your bid. Hey, if, like MU, let's go back to this. Okay, well, let's say I was in, let's just say we had another 1,000 contracts here, and you see the 1,000 contracts come in here. Everybody wants puts. I can just put it in an ask here and somebody's going to buy it. People just think you're selling at the bid more just because you're putting in a bid just to get out of the trade. You're done. You're ready to be done. If I have a very high elevated IV something, I might throw a pretty big ask side on that, or I'll put it in at the ask and somebody will probably take it because they want the puts. They're dying to get the puts. So but in reality, I'm exiting and it's going to show as an ask side entry. So that's kind of where you see a lot of people not teach that correctly. All this is, and again, I'm trying to choose my words carefully. All this is volume. It's volume at the ask. It's contracts traded at the ask. They're not bought at the ask. They're not sold at the ask. You don't know that unless you are that specific whale. So that's why I kind of always say, oh, there's 1,000 contracts at the ask here. Okay, that doesn't mean they're being bought. That doesn't mean they're being sold. There's 1,000 contracts traded at the ask. So that's something really important to kind of always wrap your head around there too. All right, how are we finishing in the market? Just kind of chopping. Oh, let's go look at that Periscope. I want to see if it kind of popped. What did I say? We were looking for a pullback from that 68.60, or was it that 68.70 that I was kind of talking about? I know it was one of those two, but we're slightly below. So like with this, I'm yeah, core. Yeah, we'll touch on those here. We'll touch on those quick before the close being. So like here, I mean, that price, you could see it was that. So the green essentially with Periscope, and again, once I get this fully mastered, I'm gonna kind of do a good tutorial video on it. The way I think of this is, think of this as a river, and these are dams pretty much. Once that water gets to the dam, it slows down a little bit, and the red would just be like a waterfall. So there's a very long. I'd rather just drop the article and have somebody read it. I mean, yeah, I don't have 2 minutes to go over the whole thing. I'll get it in the tutorial video, but that's kind of how I look at it. Like once that price kind of comes to that positive gamma level, it's supposed to suppress price. So market makers will sell into strength, and then market makers will buy into weakness. That's a very quick, easy layman's terms there. But like you could see, I mean, we were sitting up here, and I think I said 68.60. I was looking for maybe a pullback and starting to get through it. So all of that red negative gamma here is just kind of telling you that you're looking for a price to accelerate through this essentially. So it's market makers would be essentially pouring fuel on the fire with something like this on the red negative gamma. I do want to touch on the last quick two here for being here. Yeah, the fly and why you might have just joined right after I talked about it being, but that bid ask on some of those was just horrendous there. Just horrendous there. And I saw a lot of people on Twitter posting it too, and I'm like, yeah, I kind of tend to stay away from the Twitter post stuff because, you know, how those jabronis are there. Then, yeah, the COUR is actually one that was posted, and that did make a good move there. Very long-term flow there. Very long-term flow there, and again, I'm not the biggest fan of names under 10 just because they move so slow. But, yeah, no, I'm really love. I mean, I've been probably using this for a couple weeks now, and I'm just kind of trying to get all everything down, learn all the kind of the good little entries, all that stuff. So it's gonna get utilized in here at some point. It's just I gotta think of a way to kind of utilize it for everybody too, because it's hard. I'll probably have to do like a live stream, like a morning stream or something. We just sit and hang out for an hour. But like, I mean, like here, if I was looking at that 6860 and we were just kind of chopping at that level, I'm looking for us to reject that essentially here. But I mean, kind of combining that. I mean, you have different tools that you can throw in here, but you're looking for that rejection, and then I wouldn't I would be looking for, I mean, a drop to this at least 68.35, and you can see we're kind of chopping it there. So this would be, again, your suppression point. So you can see how price was kind of starting to come down fast. We're suppressing at that level here. Now it's really, I mean, you're kind of a lot of positive gamma in here, so it's probably not going to work its way through. But if we got down to that 68.10, this is where I'd be looking for a bounce essentially. But oh hey, look at that. It's 301. Okay, all right everybody. Thanks for hanging out and